Are you ready for me to start?
Yes, ma'am.
Okay. Good morning, everyone. This is Area Mays, and we're on the webinar, Let's Talk About Real Estate. We have two guests that's going to be attending with us today, which is Ruth Phillip with Candace Bank, and we have Anthony with Ants Pest Control. We know that everyone deserves to be a homeowner. Sometimes it's less to pay on your mortgage payment than it is for rent. Now we have a little bit higher interest rates, and some people may say, is this a good time to purchase a home? I would say yes. Now is a very good time to purchase a home. Rates are not what they used to be for the past few years, but you can always refinance if rates go down. We have several loans available for you, and Ruth is going to go over that. We have the VA loan, the FHA loan, the conventional loans that's available for you, and the steps in the process of purchasing a home. What you want to do is you want to prepare before getting ready to talk with a loan officer or a realtor. You want to prepare for purchasing a home, getting your credit together, getting your debt together. And Ruth will tell you about debt to income and how important that is. Then after that, you want to seek and talk with a loan officer first. You may have already gotten you a realtor, but you want to talk with a loan officer first so that you can know what you're going to be pre-approved for, so that you don't go out looking for houses that's maybe out of your price range and cause you to be disappointed a little later. So getting it connected with the loan officer is very important. Once you've gotten connected with the loan officer, she'll give you a pre-approval letter. Once you get a pre-approval letter, then you meet with a realtor. So of course, you can call me and I can help you with your new home search. But now is a great time. We're going into the busy season of home buying, which is usually from March to September each year. So you want to get prepared. Right now, the houses will stand on the market a little bit longer. So it's not like you're in such a big competition right now, but getting prepared now is a great time to get ready to purchase a home so that when you are ready, you can get the house of your choice. Location is very important. Sometimes you want to think about location and where the house where you want to live, the school districts, if you're near a hospital, the grocery stores. If you're like me, I like to be 2 minutes away from the grocery store. So all of that works into a factor of purchasing a home. And the beauty of it is that when you buy a home, you don't have to pay for a home for 30 years. You can pay extra money towards your principal and reduce the years of paying a mortgage. So that's something that every homeowner should consider. We consider purchasing a home as generational wealth. And what I mean about generational wealth, real estate can be passed down through the family. It can be a benefit. You can use the equity from your home to do things with home improvements, buying cars and things like that. So it's so many benefits to owning a home. And if you had to compare it to rent now, most people pay more for rent than they do for a mortgage payment. So what we want to do is we want to encourage everyone to, if you desire to be a homeowner, to get prepared to purchase a home. Ruth will be talking with you all later on the webinar. She'll tell you what you need to do to get prepared. But we would like to see everyone as homeowners. And that's our goal, is to get you into a home. You know, when you start and get your pre-approval, we don't stop until you're satisfied. It's so much about you being content with the home that you buy and you paying the mortgage on it. We want you to be happy with that. So that's very, very important when purchasing a home. The next thing I want to talk about is that because of the market, sellers, if you're someone that's listening that want to sell your house, what do you have to do in order to get prepared to sell your house? So what you want to do is that you want to be sure that you've taken care the things in the house that need to be repaired. I was with a client the other day and he was from out of state. And he said, I wonder why these people don't prepare the houses and make them presentable. So when people are looking at houses, they would want to buy them. And that's very important because you have to think about, if you're selling a house, and typically houses are not less expensive now. You usually getting, at least if you sell the house, you're getting at least $100,000 because there's nothing under $100,000 available. So 100 to 200, $300,000, 400 more. You want the house to be presentable because you have to think about what that person is paying for that house, how would you feel if you was paying that much for a house? You want it to be presentable. So what happens when you get ready to put your house in the market? You can call me and I'll give you a CMA. That's a that's a market evaluation and a professional opinion of to what your house may value. We give you all the data that you need, and then you gather the information and you decide what you want to sell your house for. What we do is that we give you information and advice as to what our suggestions are, but at the end of the day, then you are the one that set what amount you want to get your house for. We do recommend that well, buyers, when you list a house, you have to get sellers would in Mississippi, sellers would have to get a termite inspection. And we have Anthony on the line, and he's going to explain the importance of that. But you want to be sure that your house is free and clear of termites. So you as a homeowner can get the inspection done, a home seller can get the inspection done, and that's pretty much required in Mississippi. It's not required by the lender, but it's recommended a lot of times. Some lenders don't require it and some do, but we highly recommend before a buyer buy the house that they get a termite inspection. That's very important. If you have some rotten wood on your house, you definitely want to get that taken care of too if you're selling a house. So what we're going to do today, I'm going to introduce our guests, and we're going to let them talk, and then I'll come back and talk a little bit more before it's over. Our first guest we have is Anthony with Anthony Pest Control. He's going to speak with you all briefly about what he does and what services he provides.
Can you hear me, Area?
I can, Anthony.
Outstanding. Hello. Yeah, I'm Anthony with Ants Pest Control. I've been in business now for 15 years, doing pest and termite inspections. And as Area stated, it's very important that you get a termite inspection and a home inspection as well. You don't want to purchase a home that you have to fix a year or two later. Um, I've seen people waive termite inspections or inspections, and lo and behold, I always got calls back where they found damage. So it's important to get ahead, and go ahead and get your termite inspection before purchasing the home. We also do what's called pre-treats for new builders. We treat soil. We do soil treatment, slabs, crawl spaces, in particular crawl spaces. We do vapor barriers for your home as well. Um, Aside from that, we also do a lot of pests. But the main issue I've been having here lately, Area, is understanding a termite inspection, or all that entails,
Uh-huh.
and the termite report itself. Particularly with some realtors and lenders, I've been having a lot of issues here lately. If I happen to crawl under a house, or if we go inside of a home and we find termite damage, there are spots or block boxes on the termite report where we have to indicate that we saw live termites or we saw damage. This causes so much confusion with the lenders. So, because I can see damage and not see live termites,
Right.
and that causes an issue, and it's hard for them to understand that I didn't see live termites, but I did see damage, which means they still could be there, and that therefore I would have to check that box that says recommend termite treatment, and that can or cannot hold up the process of the loan.
Right.
Um, so yeah, and that's pretty much it in a nutshell for me. I don't have a lot as far as the termite side, but if anyone have any questions, I'm free to open to answer. I'm in a situation now where I'm actually at the doctor's office. I'm waiting for them to call me in. But I did want to get on this webinar and introduce myself.
Right. Anthony, we appreciate that. So basically what you're saying is that if you see that there was some previous damage, then you would recommend a termite inspection.
Absolutely.
Okay. I mean, a termite contract, is that
In
right?
my contract, right? Yeah,
Contract.
and you have to get a treatment. There's a difference between treatment and inspections. That happens a lot too. An inspection may cost you $95 to $100. A treatment may cost you $900 to $1,500. So there is
Right.
a difference, and there are two types of treatments you can have. One would be a what's called a liquid treatment, where
Mhm.
we drill into the home with through the brick, every third brick, and one is called a baiting system. If they're live termites, we recommend the liquid treatment because
Okay.
they're already in the wood.
Okay.
If they're not, then we recommend the baiting system, which is a system that pretty much just uh, how can I say it? Um, yeah, it just baits the termites if there are any present.
Okay. Yes. So if a buyer purchases a home and it has a termite contract, we recommend that you keep the termite contract because, like what Anthony said, is that if you have to get the house treated, it could be a little bit more costly. Like he said, anywhere from $900 to $1,500. But if you buy a house and it already has a termite contract on it, if you keep and that's if that's transferable and you keep that contract, then you do not have to pay but about $200 a month. And 200,
Exactly.
yeah, 200 is on the high end a month instead of you paying that large sum. So any home buyers that purchase a home and it already has a termite contract, we highly recommend that you keep that termite contract to help save you some money in the future.
Hmm.
So Anthony, what happens if you do a termite treatment and the buyer sees some activity after you've done the treatment?
That's good. That's a great question. The average treatment, if they already have active termites in the house, if we found active termites, it
Hmm.
could take up to 90 to 120 days,
Okay.
depending on the size of the infestation in the colony. And
Hmm.
that's a great question. That has come up before,
Uh-huh.
and and they're coming after the termite company saying, "Hey, you guys didn't treat the property proper," but that's not the case most times. It's just that it takes a little while to actually eradicate the problem.
Okay, I see. And we got a question that said, can you totally get rid of the termites?
I'm sorry, one more time.
Can you, with the termite treatment, can you totally get rid of the termites, 100% rid of them?
Absolutely, absolutely. Especially with the liquid treatment. Again, it
Yes.
may take up to a while, but it's guaranteed, 100% guaranteed.
Okay, good deal. Good deal. Okay. So we talked a lot about termites and termites is a good conversation to have because it's very important and it can cause a lot, termites can cause a lot of damage. But Anthony provides other services. He takes care, I'm gonna let you tell me, Anthony, tell them what all you do in
Oh
rep.
wow, got a little list here. Anything from bed bugs, mosquitoes, eradication of rodents, rats, mice. Of course, everybody's favorite bed. I think I mentioned bed bugs.
Hmm.
Ants, of course. Any insect that has more than two legs and wings, we take care of it. We also have now gotten into fumigation
Okay.
because a lot of times, a lot of these rodents have droppings in your attic, which causes disease. People with roach infestations, we go in and fumigate that. Um, and we also are now entering mold eradication.
Okay.
Mhm.
So with you entering the mold eradication, is that a lengthy process or is that several treatments or what?
It can be. It can be somewhat lengthy depending on how bad the mold is.
Uh-huh.
Um, and as far as termites, my license also fall under. So we got mold, and then you have mildew. A lot of times, the mold is misinterpreted. A lot of times, it's just mildew. Um,
Okay.
but yeah, mold is a very 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 expensive process. Very expensive. But
Okay.
those are some just a few of the things that we offer here at
Uh-huh.
Ants Pest Control and Termite. But yeah.
Okay. So what happens if someone has a squirrel has gotten in their attic? Do you take care of that too?
We do. We don't actually do trapping.
Uh-huh.
You have to have a license to trap, um, and we don't have a license anymore. We had it, but it was a big problem of
Okay.
getting rid of the wildlife. So what we do now is called exclusion. That's a good question. So we find out how the rodent is getting into property.
Hmm.
Generally, it's through the eaves or somewhere high up.
Hmm.
And then we just go ahead and seal that off properly so that they can't get in. If they can't gain access, then you won't have an issue.
Okay. All right. Now, my last question is that what happens when, and I've experienced this, and I'm sure a lot of other people have too, and maybe there's no resolution to this question. But when a mice is in between your walls and it died, or something I'm sure there's nothing you can do right about that.
I just had that call yesterday, area. I promise you. I just had that call yesterday. Um,
Okay.
in your roof line, when the contractors build a home, sometimes you can get up in your attic and look down into the wall. Once the rodent has fallen down to a rat or a mouse is gonna climb out, unless
Uh-huh.
it's a baby. But if something else falls down there and dies, it's very little that can be done aside from cutting out the sheetrock and removing the rodent.
Uh-huh.
That would be more on the wildlife side because you don't know what it could be. Um, for instance, I did it one time. I thought it was birds, and it was actually baby raccoons with their mom. So,
Oh,
and
wow.
yeah, and that's a vicious animal with her babies. So you want to
Okay.
be, yeah. So you have that. I would highly recommend calling wildlife at that point.
Okay, good, good, good. Okay. We're gonna just check and see does anyone else have any questions for Anthony? He is at the doctor's office, so if we don't have any questions, we're not gonna prolong him. Just give you all a few minutes to see if anyone has any questions. Okay. Anthony, we appreciate you logging in. If you want to stay on the line and can stay on it, there may be some questions afterwards, but if not, then we'll get back with you. And we understand if the doctor called you to the back, okay?
Okay, thank you, Ari.
All right, hold on. Let me see. Was there a course? No, it's just thank you, everyone. Okay, okay, Anthony, thank you.
All right, thank you.
Okay, thank
Bye
you.
bye.
Okay, our next guest is Ruth Phillips with Candace Bank. So she's going to talk to us about financing and what you all need to do to get prepared to purchase your home, what your credit score needs to be, and the steps that you'll need to take to obtain a loan for new home ownership. Okay, Ruth.
All right. Good morning, everyone, and thank you for joining the webinar. Aria, thank you for inviting me this morning.
Oh,
It'll be
absolutely.
really easy. If you want to grab some notes, this will be a good time to take some notes. But one thing Aria said that kind of puts me right on track to when is it a good time to buy a house? It's a good time to buy a house when you are ready to buy a house. Please don't look at outside things to control what your goals or dreams of obtaining home ownership will be. The rates are going to be what they're going to be, but also rent has increased twice as much as what you're paying in an interest rate. Plus, equity is increasing in home ownership. So if you bought a house now and you sold it, your equity I've had people sell area as little as 2 years, and they've earned a lot of money compared to what
Oh,
they
yeah.
paid for it. So this is a good time to buy a home. Whether you're a first-time home buyer or you're a seasoned buyer and you're about to buy another home, these are some of the same steps that'll be required. The main thing a lender looks at, one of the main things, there's three areas that we look at. One is your credit. We want to look and see credit is there based on your history. How have you paid other people back? Are you paying them back? Are you overspending on your budget? Are you late? Period. That's what we look at. We look at three pull a tri-merge, which is Equifax, Experian, TransUnion, and Equifax, TransUnion, Experian, and yeah, those three. Those are the ones that we pull. Each one of those come together to make what's called a tri-merge, and that's just three bureaus put together. Our credit score limits, the credit scores, I've seen them as low in the low 300s, as high as 850. But it always depends on a couple things. If you're low in the low, anything under 580, you can still get a mortgage, but you're going to have a bigger down payment, less opportunity for down payment assistance if you're a first-time home buyer. So it's a couple things you want to do. If your credit score is below 580, I would recommend that you get some credit restoration or start. The main thing is to pay your bills on time. If you start paying your bills on time, no late past 30 days, reduce the credit balance down to 30% of the high credit. And you know that your revolving credit debt is the strongest piece of the pie when it comes to a credit score. If you get that down to 30%, you'll see a significant change in your credit score probably within 60 to 90 days. So we do look at a credit score. We look at how you manage your debt overall, how much income you have versus the debt that you have going out based on your gross income. We look at your credit score just to see how well you use it. Do you have a lot of credit cards and you're using them all the time? Or do you have very few and you're very using them? You don't use them, but you might have used them. And a lot of times with lack of use, the creditors will close your credit card, and that will damage your score as well because you've taken out a debt that had history that now is no longer reporting. So be careful there too. Keep your old credit cards open. I have a credit card that I've had since I was in college. Okay, and I'm 25 now. Be 61 in a few days. But anyway, I'm like, I've had that credit card that long and I don't really use it. But because I've had it so long, when they send me a letter saying they're going to close it, I immediately buy something on it. If it's nothing but gas, I'm going to get something on that credit card just so I can keep the score open and going well. So one thing we look at is credit, but that's only one small piece of the pie. Credit is the easiest piece of a mortgage that can be corrected anywhere from 30 to 90 days if you're that window. I've had people need to take longer because maybe they were in bankruptcies. Maybe they needed to file a bankruptcy. It just depends. Each one is case by case. If you don't know where you are with your credit, you can go to annualcreditreport.com and get a copy of your report. You will have to pay for the score. I also recommend that you can use myfico.com, which will give you a score, but they do charge you a monthly fee. Myfico.com is a great tool to use when you're comparing a mortgage report to your actual credit. Okay, the next thing we look at is employment. How long have you been employed on your current job? We look for the last 2-year history. Are you a full-time employee? Are you working 40 hours? And I get a lot of times people, they're eligible for 40 hours, but they don't work 40 hours. And then when they apply for a mortgage, they want us to give them income based on 40 hours. But we look at your year-to-date income, and we can clearly see, yes, you've been working 40 hours, or no, you haven't been working 40 hours. We look at that clearly to see. So if you're offered 40 hours, please work those 40 hours a week. Also, we look at your job history. Have you been on this job for 2 years? And if not, where have you been working for the last 24 months? Are you changing jobs every 2 months? Are you changing jobs every 6 months? And if that's the case, and you're interested in buying a home, I'm going to highly recommend that you stop job hopping and start just finding you a job. I'm going to be happy on this job because my goal is to own a home. And so I'm going to be happy on this job until I can have job stability so I can buy a house. We look at also on your job to make sure that it's full-time, that you're not on probation or any of those things. So that's what we look at, stable income. There's other incomes, child support, Social Security, disability, all those things we look at as well. You could have a pension there. We look at that. Alimony. If it's stable and it's going to continue for the next 3 years, you will be able to use that as your recurring income. The next thing every mortgage company is going to look at, whether you're buying a house with first-time home buyer programs or not, you have to have some money because you need money to actually start the transaction with Area. When she takes you out to buy a house and you find the perfect house you've been dreaming of, you have to have what? Earnest money. That's what's going to secure the contract, take the house off the market, which will give you an opportunity to work on your loan and still know that you're going to end up with that house. That earnest money seals it and says, hey, I'm going to buy that house. We can take that house off the market and you can be comfortable working on getting the loan closed. So we look at your earnest money. So one thing I've been looking at a lot of lately is bank statements. Your bank statement, we look at it for the last 2 months, okay? We have also some systems all lenders do now. We're coming to the 21st century, of course, where we have a lot of AI. We do a lot of things what's called fast track, whether it's with your employer or with your banking. We send you an email, you fill out the information, you find your employer, you find your banking information. We get the verification of rental up front, and we get the verification of your assets up front. And getting the verification of your assets up front, we look at where you spent your money for the last 60 days. A lot of people right now, you got great credit, I'm seeing a lot of this, but you're using things called Afterpay, Affirm, Klarna. There's another thing out there. Oh, what is it called? You know, the buy now and pay later. But it doesn't report on your credit report, but it's a debt. And so it's unreported debt because they don't report on your credit report. So now we have to count those into your debt to income ratio. So now I've gone from a debt to income ratio that's perfect for the program. I get your bank statement information and you've got a lot of Afterpay, Affirm, Klarna, those debts. Now we're off. Now we're going to require that you pay those debts off because remember, most of the time they're just 4 payments. We're going to ask you to pay those off, whether it be at the closing table or over time while you're looking for a house. We're going to ask you to release those. So that's one thing we have to be really careful of. And if you are looking to buy a house and you do have any of these Afterpay programs, I will highly recommend that you stop them. Stop using them. Stop spending. I'm working on a buyer now. And every time I look at her statement, she got a new Afterpay. And I finally said, stop it. We talked about this from the beginning, and now you're under contract. We're not going to close and we're not going to refund any of your money back because you're destroying your own loan with Afterpay. Do not buy things for a house you don't own. I see so many people, sometimes they go buy a whole appliance package and they live in an apartment. What house do you own? Nothing. So wait until you actually close, save as much money as you possibly can, be a good steward. And while you're going into stores, don't buy things that you don't need. My favorite thing is to say is put it back. You don't need it. You got a bigger dream ahead of you, and that's home ownership, waking up in your own and starting to build your generational wealth for yourself and your family. So put it back until you're ready for those things. So the next thing a mortgage company is going to look at your debt to income. We base it off your gross income. We qualify you. We do not put you on a budget and tell you what you can or cannot afford. So we usually take 33% of your gross income as the housing ratio. That means that's the max your house can cost is at 33%. Then we'll take the housing ratio and all reoccurring debt that usually can go up to like a 45% of your gross income. So that's what's called debt to income ratio. Every lender uses the same ratio. So we look at that. So remember, when you're qualifying, getting qualified, remember that you live out of your gross income. So be careful there. So you don't want to be house poor, where every time you have to pay that house note, you're regretting having to pay it because it was based on your gross income and not that income that you actually bring home. The next thing I'd like for you to do is start writing down the documentations that you will need. You will need a copy of your most recent pay stub. Most companies have this digital. You can download it to yourself, email it to your lender. Your W-2s for the last year, same thing, digital. Download, email. If you're self-employed, you'll need your tax returns for the last 2 years. Anyway, get them on a PDF, email them to your lender. Do these things while you're getting pre-qualified. So when you do get under contract, we don't have any uh-ohs. Oh, I forgot to tell you this. Now it changes the whole scenario. And sometimes it can cause you to be a decline because you didn't disclose something. So I always tell my customers, tell me everything up front so we don't have any back end hiccups, okay? Always talk to your mortgage professional. I have a lot of people tell me what their grandmama said. I spent 40 minutes today on a line with a lady telling me she wanted her granddaughter to work with the best. So she called me because I did her loan, and come to find out she's working with one of my coworkers. And I said, she is the best. We're on a team, same team together. But make sure it's a professional. Make sure you get, I want to say warm and fuzzy, but make sure it's a person you trust for sure. Okay. There are some products that Cadence Bank offers that are different than other lenders. One of them is called Right at Home. This is 100% financing. There's no private mortgage insurance. The rate is a fixed rate. We reduce $500. We give you a $500 credit at closing off your closing costs. You can either use this when you're purchasing a home or you can refinance a home, but it must be your primary residence. You cannot own any other real estate, and your credit score must be a 640. In the credit score package, you have to have at least 2 trade lines with a 24 payment history or 124 with 212. And with this program, you can use non-traditional credit. Some people don't have credit, but they've been renting forever. They have a utility, they have cable, they have a cell phone, they have car insurance, daycare, tithes to their church. If we can put those back together, we can actually make you credit, okay? That program is used. The income limit for Shelby County is 66. Shelby County, let me back up. The Memphis MSA, which includes DeSoto County, Shelby County, Tipton County, Fayette County, Tate County, all those counties in North Mississippi, the income limit is $66,400 for the applicant's income only. And again, you don't have to be a first-time home buyer, but you cannot own any other real estate and use that program, okay? The next program we have is called Emerging Communities. It is if a property is in a majority minority census tract, and they're all over the Memphis MSA. There's some in Collierville, there's some in Olive Branch, DeSoto County have them throughout, South Haven, Horn Lake, Walls, Byhalia has a few of them. Memphis, 100% financing. Again, no PMI, credit score 640, debt to income ratio is 40%. However, if you have a 680 credit score, we will allow you to go up to 45% of your gross income. The sales price limit for that program is $806,500. So it's just not for low income. It is based on the property location. The next program we have, it does have some grants with it. It is a 97% loan. That means you've got a down payment of 3%. It doesn't have a real credit score requirement. It just goes based on if you get a DU approval. DU is an electronic underwriting system that is used to approve your loan. It must get an approval there. The PMI it will have, which is private mortgage insurance, but is at a reduced premium. If you earn $84,000 a year or less, you get $9,000. If you earn $117,600 or less, down to $84,000, you'll get $3,000. This is a very good program. We are running that right now. We have some great doctor loans. If you're either in residency or you have a family member that's in residency, when they get their match, they will be able to use the program and they'll finance up to 103%. We are partners with all of the state agencies for down payment assistance, whether it's Mississippi Home Corporation, Tennessee Housing, which is known as THDA, in Arkansas Bond, those 3 states. We have them in every state, but that's pretty much in our tri-state area that we use. Any questions? I know I'm trying to go fast because I think I only got like 10 minutes, but it's a lot to talk about in 10 minutes. Any questions?
You're doing good.
Okay, good. Okay, good. So those are some programs, and we do, of course, do our traditional FHA, which has a down payment of 3.5%. And a lot of times right up in here, Eric, if they have a 640 credit score, I'm going to try, and they meet those income limits, I would try to put them on one of those 100% programs. And the reason why, there's mortgage insurance that's included in the FHA loan and a down payment. If I can make their ratios fit and they meet all the requirements, it's better off to get that 100%. And as right now, Cadence is running a special on the 100% programs. You get 1% off the interest rate. So today's market rate was like 6.25. So that was a really good program that's going right now. The same thing with Emerging Communities. And you could buy the rate down. You could pay discount points and buy your interest rate down. But every time you pay a point does not mean that decreases the rate 1%. It is based on how the rates are issued out for that day. What else I was going to tell people about? Oh, VA, you must be a veteran or a spouse of a deceased veteran, or a spouse of a veteran that you currently take care of. He's in or she is incapacitated in some type of way and still receiving VA benefits. You can get 100% financing with VA. Their income limit, there's not one. Their sales price limit, there's really not one there, but if you go over $806,500, you may have to have a down payment with the VA. Our conventional loans outside of our 100%, they normally start at 3% down, and their limits are $806,500. If you go FHA, that limit, the loan amount is $524,225. But again, FHA with Cadence will allow you to go down to at least a 580. If you get below from 620 to 580, your debt to income ratio cannot exceed 45%. So at the same time, those loans must have an instant approval, or a D, it's called direct underwriting approval with Fannie Mae. I have had credit scores as low as 560 get approved, but they had a large down payment. In this case, we'll try the loan with a larger down payment just to see if we can get an approval. Any questions?
Okay, Ruth, that's some very, very good information. I tell you, that's very good. We appreciate that. We do. We know that knowledge is powerful, and that's what we want to do. We want to educate the community about what it takes to get your mortgage and what's the process. And you've done really good with explaining that. So getting an understanding is so important. We do have a question from Brenda said, what's a good down payment? Of course, that's going to depend on which loan you get, but Ruth, I'm going to let you answer that question.
It's going to depend on what, again, what loan type. FHA, you start at 3.5%. Conventional, there are products that are at 100%. And then you can go as high as you like. A lot of times people will do a down payment outside of the 100% to get rid of the private mortgage insurance. And that requires 20% down. Or I've had customers say, hey, I want my house note. I want this $400,000 house, but I want my house note to be this. We will back into the house note based on what their down payment's going to be if they meet that. There's one thing I want to talk about really, really quick when she said down payment. There's a method that is called recasting, and it is for conventional loans only, okay? It will allow a buyer who already owns a mortgage and you have a conventional financing. If you're interested in paying additional principal payments, which you know that'll shorten the term of the loan, but you have one lump sum. I got some money I've been saving up, and I want to put this lump sum on my mortgage. They will recalculate the principal and interest payments based on that large percent. So, but the catch, and I hate to say catch because it's really not a catch. The ticker is you have to have 10% of the balance, outstanding balance. For instance, if your current mortgage balance, you're already bought your house, you're in servicing, you're happy, you got a conventional loan, you're trying to pay your house off, you came into a large lump sum, but you want to put something on the mortgage. So if you owe $100,000 on your mortgage, you would need a principal payment of at least $10,000. You would set that up through the servicing area, and they would recast the payment. What that means is you put that additional principal down, they will recalculate your principal and interest based on $90,000 for the rest of the loan. And that'll reduce your note at least $200, if not more. I have somebody who just did that. They did it. It cut their note down $283. And so where they were already paying over $1,000 a month for their note, now their notes dropped down to $866. So it saved them, and they're like, well, I just might as well keep paying the additional principal. Correct, because now you're reducing the term of the loan, but you're doing it to where you're actually going to pay off early and be on your own home. And then if you didn't pay, if you paid it off early, you got ready to sell that house and buy another house, you wouldn't have a mortgage to pay off. But people don't know about recasting. So when you do get a mortgage and you do get conventional financing, ask your lender if they offer recasting, because that's very important.
Okay, that's very good. Now, Ruth, tell us, a lot of people when they think, and I've met clients that say, well, I got a 100% loan, that's all I need, but they don't realize they need money for closing costs. So maybe explain that to them too.
Absolutely. You do need closing costs. A lot of lenders don't charge origination charges. It's priced into the rate. So once you get your rate, they don't charge that. But if you want to buy the rate down, you would have discount points. There's an appraisal fee. There is a fee for the credit report. There's a flood certification fee. There is a tax fee where they charge to verify the property taxes or who they're supposed to be with. You're going to have a closing attorney. They're going to charge you to close out the loan because they have to do what? A title search. They have to do title insurance. They have to do the recording of the deed, whether it's state or city deed, or your state tax stamp. All of those things are part of your closing cost. The seller can pay your closing costs up to a certain percent. Conventional loans, if you're at 95% or lower for your down payment, the seller can only pay 3%. If you're at 100% financing and it is a portfolio loan, most of the time the seller can pay up to 6%. FHA will allow them to pay up to 6%. VA will let them pay all of the percent, and there's not a cap on it. And I know some lenders say there's 4%, but that 4% that they capped off is for improvements, whether it be improvements to the home or improvements like VA with some lenders will allow you to pay off the buyer's debt, the veteran's debt. So that's what closing costs is for. There are all third-party fees. There's really nothing that you can get waived. I have people ask, can you waive that? No, because we're paying the third party.
Right.
The attorney has to close out the loan. They have a staff that they have to pay for. They got to order title. They got to get it insured. And you want to make sure that you have title insurance for sure. Because if you don't do an owner's policy on your title and something comes back, and things happen because there's no perfect people out here with the search, and they come back and figure out, oh, there was another lien that was missed. Maybe 2 sales ago it was missed. It could come back, and if it's more than what you're insured for, the mortgage company is only going to cover the title up to the loan amount. You need to cover your own title in between the gap portion of it. So it may be a few extra dollars at closing, but it is so worth you paying it. Okay. I had a lady one time, and I just had this too, less than 10 years ago. She had her title insurance and it came back on her. She'd already sold her house, but the builders who built the house, there was a mess up in a mechanical lien, and these other people were there forever. And that just came up when that house was foreclosed on. They would end up being, like I said, it was covered because she had owner's policy when she actually owned the property, which is quite interesting. They went back to the first buyer. But yes, ma'am. They do prepaids. We pay homeowners insurance up for the first 12 months. So when the insurance premium is due again, it's in your escrow account, and the same thing for the property taxes. Now, Aunt said something that was very important. I recommend that you get a home, the termite. Please get a termite inspection. When people waive their termite inspection, I cringe. Because you don't know what's under that beautiful paint job that you have. So make sure you do that. Also, home inspections, lenders don't require them, but they are highly recommended.
That's correct. Okay, that's good information. Like Ruth said, that you do have to have money for closing costs, and sometimes we ask the seller to pay your closing costs. And here recently, the sellers has been paying quite a bit of closing costs, but it's not mandatory. So you want to be sure that you have some money saved up, earnest money. You need money for your home inspection. You need money for your appraisal. You have to pay that up in advance because the lender is going to get a bill for it, so it has to be paid, although you may be credited for it at closing. So you do have to have some money when you get ready to purchase the home, regardless of which program you're able to take advantage of. So we want to see if anyone has any questions right now.
So I want to throw this in when you talked about money.
Okay.
You want to make sure you have some reserves, because when you buy a house and you move into that house, yeah, you had a home inspection. It could be brand new, but I've had brand new houses move in, and the day you turn on the heat or the air when you move in, it didn't work.
Mm-hmm.
Yes, you're going to get a warranty, and I advise you to get a warranty as well, but you want to have some type of reserves in place. and make sure, because some of the loan products, that's what turns the approval. They may not have super strong credit. They have a medium job history, but then they may have a lot of assets saved up. And we can use 401ks as your asset. And if you work for a company that has a 401k and you're not a participant, I highly advise you to start participating. Start at 1% and work your way up to 10% till you are tied into yourself at a vehicle that you can't go get out. Now I'm just saying, I'm serious about myself, and I'm honest and very transparent. I was a terrible saver area, terrible,
Okay.
because I could go to the bank and get it out. I was going to get it out, but I became excellent when it came to the 401k. And guess what? The company matches the money.
Right.
And so that's how I use my vehicle to save money. I'm much better. I can save local now.
Okay.
Not before, not when I was younger.
Yeah, and I think most of us was that way. Yes, okay. Does anyone have any questions? Okay, we don't have any questions so far. Ruth, you want to give them your contact information just so when you all get ready to purchase your new home, your loan officer to call is Ruth at Candace Bank. We highly recommend it. I've worked with her and known Ruth for a long time, and I have been very pleased with her. So Ruth, you want to give them your contact information?
Absolutely. I'm going to put it in the chat as well. My name is Ruth Phillips, and I'm with Cadence Bank. You can reach me at 901-643-1121. I usually start between 8 and 8:30 every morning, and I cut off at 6:30. And I'm going to be honest, sometimes it's later than that. I'm available over the weekend. Sometimes you have to give me a little time to get to a computer to help you. I may be able to, I'm gonna get it. I'm gonna reply back to you, but just please do. I also am the voice of Ask the Expert at WDIA with Bev Johnson. We do that workshop once a month and that radio show about home ownership. So if you get down the road, you have questions, even if you're working with another lender, I want home ownership for everybody. So I don't mind answering your questions. I'm not going to bash your lender. I'm just going to try to help you get to the closing table. And so that area knows if she has somebody who's got a question, I'm like, tell them to do this, tell them to do that, because I don't quit till I get you to the closing table. Even if I have to get you to do something, it's not going to be under the table. It's going to be right. But I am going to come back with something that can help you get to the table.
And I can agree with that. Ruth really tries to help people to get to the closing table. She puts her heart into what she's doing, and she's a very good loan officer. So please call her if you all know someone that wants to purchase a home or if you want to purchase a home. Anthony was online, but of course he had to get off because he was at the doctor's office. So I'm going to give you all his contact information. His name is Anthony. His phone number is 901-282-4483. And I've known Anthony for a number of years and have been very, very, very pleased with him. We did get a few messages from the chat saying that they had appreciated the meeting, Ruth. So we really appreciate you attending in the webinar with us on today. If you have any questions for me as a realtor, please call me Area Mays at 901-335-9324. And we thank you all for attending today. Thank you. Thomas? Okay, so I guess that this is going to be